As one of the world's financial hubs, Singapore's banking industry is a significant player in the global financial landscape. With its big three banks, DBS Bank, United Overseas Bank, and Overseas Chinese Banking Corporation, Singapore has established a strong regional presence and offers a wide range of banking and financial services. But just how big is Singapore's banking industry compared to its regional counterparts? Singapore's banking industry is highly developed and competitive, playing a crucial role in the nation's economy. The three largest banks in Singapore are DBS Bank, United Overseas Bank (UOB), and Overseas Chinese Banking Corporation (OCBC), collectively known as the Big Three of Singapore's banking industry. These banks hold a significant regional presence, with branches and subsidiaries in various countries across Southeast Asia and beyond. They provide a wide range of banking and financial services, including retail banking, corporate banking, investment banking, and wealth management. To understand how Singapore banks compare with their regional counterparts, let's examine the size of these banks in terms of their assets, market capitalization, and global reach. According to each respective latest report, DBS Bank held total assets worth approximately 743 billion Singaporean dollars or 550 billion US dollars, making it the largest bank in Singapore. OCBC followed with total assets of around 559 billion Singaporean dollars or about 413 billion US dollars, while UOB's assets amounted to about 504 billion Singaporean dollars or approximately 373 billion US dollars. Collectively, these are about 1.3 trillion US dollars in total assets. In terms of market capitalization, Singapore's banks are also significant players in the financial industry. As of the latest market data, DBS Bank's market capitalization reached around 64.4 billion US dollars, while OCBC and UOB had market capitalizations of approximately 43.7 billion US dollars and 38.8 billion US dollars respectively, which are collectively about $140 billion in market valuation. Now, although these three major banks are the face of Singapore's banking industry, they do not cater to the needs of smaller firms. According to Statista data, banks in Singapore hold over 2.36 trillion US dollars in total assets, highlighting the vast size of the banking industry in Singapore. As a major financial hub, Singapore holds a significant position in the global financial industry. However, being a financial hub is not only about the number of depositors, the size of the banking industry, or the number of foreign investments in the country. It is important to understand this sector's role in the country's economy and how it compares to other financial centers worldwide. Now, let's compare Singapore's banks with those from South Korea and Japan. South Korea is home to some of the world's largest banks, including KB Kookmin Bank, Shinhan Bank, and Woori Bank, while Japan's top banks are Mitsubishi UFJ Financial Group, Sumitomo Mitsui Financial Group, and Mitsuho Financial Group. When it comes to total assets, Singapore banks are generally smaller than their South Korean and Japanese counterparts. For example, as of the latest report, DBS Bank had total assets of around $550 billion, while KB Financial Group's total assets stood at approximately $556 billion, and Mitsubishi UFJ Financial Group's total assets were $2.99 trillion. In terms of the entire banking industry, Singapore's total assets stand at $2.3 trillion. South Korea's total assets are at $2.7 trillion, and Japan's total assets soar to $19.6 trillion. In terms of market capitalization, Singapore banks also trail behind their Japanese peers but fare better compared to South Korean banks. For instance, DBS Bank had a market capitalization of $64 billion, while KB Kookmin Bank's market capitalization was $14 billion, and Mitsubishi UFJ Financial Group's market cap was $80 billion. Despite the stark difference in total assets, it is noteworthy that Singapore's largest banks can hold their own against South Korea's largest bank. Furthermore, Singapore's bank valuation also topples down to that of South Korea's largest bank and is not that far away from Japan's largest bank. There are a lot of explanations for this. These are likely due to market forces, trust in the overall banking sector of Singapore, and even the perception of its future value. Moreover, Singapore banks have managed to build a strong regional presence and maintain a robust international network. This has allowed them to compete effectively with larger banks in the region and establish themselves as key players in Asia's financial landscape. Now, let's compare Singapore banks with their counterparts in Malaysia and Indonesia. Malaysia's largest banks include Maybank, CIMB Group, and Public Bank, while Indonesia's top banks are Bank Central Asia, Bank Mandiri, and Bank Rakyat Indonesia. In terms of total assets, Singapore banks are generally larger than their Malaysian and Indonesian counterparts. For example, the DBS Bank, which had total assets of $550 billion, is far larger compared to the two countries. In fact, Malaysia's total assets held by the entire country's banking sector sits at only about $804 billion, which is a bit higher than the DBS Bank, but do remember that this is the entire banking assets of Malaysia. Indonesia, on the other hand, has a total assets from its banking industry at $723 billion. Similarly, when it comes to market capitalization, Singapore banks massively outperform their Malaysian and Indonesian peers. The DBS Bank had a market capitalization of $64 billion, while Malaysia's largest bank, which is known as Maybank, has a market capitalization of only $24 billion, and Bank Central Asia at $74 billion. BCA's market capitalization, however, is quite daunting. For a company that has only about $84 billion in total assets and a revenue of no more than $6 billion. In stark contrast to DBS Bank, which has a revenue of over $11.9 billion, which may suggest that Indonesia's BCA group is quite overvalued, or at the very least, some form of market forces at play. Now, in terms of global reach, Singapore banks have a more extensive international network compared to Malaysian and Indonesian banks. They have established branches, subsidiaries, and representative offices in various countries across Southeast Asia, Asia Pacific, Europe, and North America. This has allowed them to tap into the growing demand for financial services in these markets and expand their customer base. While it's evident that Singapore banks may not be as large as their Japanese counterparts, they are quite comparable to South Korean banks in terms of total assets and market capitalization. Singapore banks also hold a competitive advantage over banks from Malaysia and Indonesia. It's important to consider that Singapore is just a small nation compared to the other countries we have mentioned. South Korea is an immense economic powerhouse, while both Malaysia and Indonesia are significantly larger than Singapore. Despite being a small island nation, Singapore has successfully established itself as a strong regional financial center. Its international network extends not only throughout Asia's financial landscape, but also across the world. In this context, the success of Singapore's banking industry is quite remarkable given the country's size and resources. Singapore's stable political and economic environment, coupled with its well-developed financial infrastructure, has allowed its banks to thrive and attract foreign investment. Moreover, the nation's strategic location as a gateway between East and West has made it an attractive hub for international banks looking to expand their presence in Asia. And finally, it's important to recognize that Singapore's reputation as a financial center extends beyond its banking sector. The country boasts a substantial asset management industry. In fact, according to data from the Monetary Authority of Singapore, the total assets under management in Singapore for 2021 amounted to an impressive $3.8 trillion. This makes Singapore the premier asset management center in the entire Asian Pacific region. Additionally, there are other key statistics that highlight the sheer size of Singapore's overall financial industry. However, we will not delve into those details in this discussion and save them for another occasion. In terms of Singapore's future banking industry and possible challenges, the country may still continue to become one of the world's financial hubs, along with its banking sector seeing record asset increases. However, Singapore banks must also remain vigilant to the potential challenges ahead. One such challenge is the ever-evolving regulatory landscape, both regionally and globally. The tightening of financial regulations in response to economic crises or other financial stability concerns may impact the growth and stability of banks in Singapore. To stay ahead, Singapore banks must keep abreast of regulatory changes and adapt their business strategies accordingly. Another challenge is the increasing competition from non-bank financial institutions and fintech companies. These new players offer innovative financial products and services, often at lower costs and with greater convenience for customers. Fintech companies such as Grab with its digital payment services and C Limited with C Money may one day pose a big challenge to the entire banking industry. To stay competitive, Singapore banks must continue to invest in technology and digital transformation, as well as explore strategic partnerships and collaborations with fintech firms. But anyway, do let us know what you think. Thanks for watching.